According to Law Number 16 of 2009 concerning general provisions and procedures for taxation, hereinafter referred to as UU KUP, Article 1, Number 1, says that tax is the contribution of a taxpayer to a country owed by an individual or an entity that is forced based on the law and by not getting compensation directly and used for the state's needs for the greatest prosperity of the people. Tax law, according to Rahman Sumitro, is a collection of regulations that regulate the relationship between the government as a tax collector and the people as taxpayers. Indonesian taxation is based on Article 23A of UUD 1945, where tax is an enforceable contribution exposed on all Indonesian citizens, foreign nationals, and residents who have resided for 183 cumulative days within a 12-month period or are present for at least 1 day with intent to remain. So what is included in Article 23A of UUD 1945 is taxes and other compulsory levies required for the needs of the states are to be regulated by law. There are 6 things that are regulated in tax law, including tax subject and taxpayers, tax object, tax obligations to the government, creating and removing tax debt, tax collection method, and how to file objections and appeals. And there are 5 tax elements, including fiscus, tax subject, tax object, public interest, and as well as tax assessment.
According to Rahman Sumitro, tax law has a positions about the laws. First, civil law is a provision that regulates the rights and interests of individuals in society. Second is public law. Public law is a law that regulates the relationship between the government and its people. Therefore, tax law is a part of public law. The public law consists of 4 laws. First one is constitutional law, second one is administrative law, third one is criminal law, the last one is tax law. Moving on, tax law serves as a reference in creating a tax collection system that is based on the basis of justice, efficiency, and arranged as clearly as possible in the law on the tax law itself. Tax law functions as a source that explains about the subject and object that need or not needed to be used as a source of tax collection in order to increase the potential of overall tax.
There are 8 laws that form the basis for tax collection in Indonesia. The first one, Law Number 13 of 1985 concerning about stamp duty. The second one, Law Number 12 of 1994 concerning about land and building taxes. Third, Law Number 16 of 2000 concerning about general provision and tax procedures. Fourth, Law Number 17 year 2000 concerning about income. Fifth, Law Number 18 year 2000 concerning about value-added tax on goods and services and sales of luxury goods. And sixth, Law Number 19 of 2000 concerning about tax collection with forced letters. 7. Law Number 20 of 2000 concerning about customs for lands and building rights. And finally, Number 8, Law Number 14 of 2002 concerning about the tax court. So there are 2 sources of tax law. The first one is source of material law. Sources of material law are the factors that help the formation of law, like factors relating to social, political, economic, or international relations. It also related to regulation concerning parties that imposes taxes and parties excluded from tax imposition, things that require tax and the amount of tax to be paid. Second, sources of formal law. Sources of formal law are sources that obtain legal sources or methods that cause official law. For example, legislation, which is the Pancasila Principle and the 1945 Constitution, jurisprudence, and doctrine. The definition of formal tax law itself is a law that is issued about material tax laws that come true.
Switzerland is no longer the destination for rich people, especially those who intend to avoid taxes. This is because Switzerland has committed to open customers' information to other countries for tax purposes. Switzerland is a country that is included in 153 countries that are committed to exchanging information related to tax interest, or known as the Automatic Exchange of Information, or the AEOI. Switzerland has also begun exchanging information since last year. Automatic exchange of banking information between Indonesia and Switzerland is expected to run in September 2019, meaning account holders in Switzerland from Indonesia are getting ready to be checked by the Directorate General of Taxes. The Indonesian and Swiss governments have signed a joint declaration regarding the AEOI. The signing was carried out between the Directorate General of Taxes and the Swiss Ambassador to Indonesia in July 2017. When it is effective, there are at least 5 important data that will be exchanged, namely the identity of the account owner, account number, financial institution identity, account balance, and income obtained from the account or interest. The Directorate General of Taxes hopes that the data can be used to test compliance with taxpayer reporting and encourage the awareness of taxpayers to fulfill their tax obligation voluntarily, especially reporting income and financial assets abroad. Many Indonesian businessmen choose to save their money abroad, such as Switzerland. In 2019, President Jokowi said there were deposits of Indonesian businessmen abroad as much as 11,000 trillion rupiah. Estimated amount of that amount had become an encouragement for the government to launch the 2016 tax amnesty program. The tax amnesty program, proclaimed by the government, was able to attract hundreds of thousands of taxpayers and provoke trillions of funds to return home to Indonesia. After the tax amnesty, the Indonesian government hopes a great deal with the cooperation of the AEOI. Several regulatory instruments have been prepared, among others, based on Minister of Finance Regulation number 39 year 2017 about procedures for exchanging information based on international agreements. There are 3 ways that can be used to obtain data or information from other countries.
Tax amnesty is the elimination of taxes that should be owed, not subject to tax administration sanctions and criminal sanctions in the field of taxation. The tax obligation that receives tax amnesty consists of income tax obligations and value-added tax, or value-added tax and sales tax on luxury goods. Tax amnesty is a policy breakthrough that has the following benefits and objectives. The first one, increasing economic growth through asset repatriation, which is marked by an increase in domestic liquidity, improvement in the rupiah exchange rate, lower interest rates, and increased investment. The second one is extension of a more valid, comprehensive, and integrated taxation database. And the third one is increased tax revenue. In the announcement of the tax amnesty program, President Joko Widodo said that tax amnesty is a major step towards resolving the issue of taxation in Indonesia. In addition, President Joko Widodo also stresses that tax amnesty is not an attempt to forgive corruptors or other crimes. The tax amnesty in Indonesia is carried out through 3 periods. The first period of tax amnesty took place from 28 June 2016 to 30 September 2016, followed by the second period starting from 1 October 2016 to 31 December 2016. The third and the final period of this policy took place on 1 January 2017 until 31 March 2017. The tax amnesty is an opportunity for taxpayers to pay a certain amount of tax, including the elimination of interest and penalties without fear of being convicted. The government provides some convenience to taxpayers who want to join the tax amnesty program, with the tagline of Revealed, Redemption, Relief. The facilities provided are in the form of low tax rates and some facilities such as elimination of administrative sanctions, the elimination of tax audits for prosecution for criminal purposes, elimination of all taxes owed, termination of tax audit for those being examined, no final income tax is imposed for the transfer of property in the form of shares, buildings, or land. especially for taxpayers who save their assets in other countries. They must return their property or distribute their assets which have been kept outside to be invested in Indonesia for 3 years. These investments can take the form of state-owned enterprises bonds, financial investments in domestic banks, bonds of domestic companies, cooperation with the government or business entities as investments in infrastructure development, government financing institutions bonds, and other investments in accordance with statutory provisions. In essence, they are required to invest in legal channels provided by the government. In addition, after the statement of the assets is issued, taxpayers for 3 years are not allowed to reinvest their assets abroad. Tax amnesty is indeed very beneficial for taxpayers, especially taxpayers who have outstanding tax in arrears. Even so, taxpayers are expected to be honest in reporting during tax amnesty periods. Some of the following can make sanction taxpayers and the tax amnesty period. The first one, a taxpayer who gives a false report in his assets. The second one, imposing sanctions amounting to 200% of income tax for the discovery of assets from taxpayers who still keep their assets or income in manipulative ways after he or she reported during the tax amnesty period. The third one, unreported treasure findings from taxpayers who do not participate in the tax amnesty program, so that the assets are added directly as income and subject to additional sanctions not following the tax amnesty.
To sum it up, now that we know that tax is involuntary fees charged on individuals or corporations and also enforced by government entity, whether it is local, regional, or national, in order to finance government activities including development as we mentioned. That is why tax has a very important role in the life of the state. The 4 important functions are namely budget functions, regulative functions, stability functions, and revenue redistribution function.
Budget function is a source of state income. To carry out the routine tasks of the state and carry out the development, the state needs money. This fee can be obtained from tax revenue. Today, taxes are used for routine financing such as employee expenditure, goods shopping, maintenance, and so forth. The government can regulate economic growth through tax policy. With regulating functions, taxes can be used as a tool to achieve goals. For example, in order to bring investment, various types of tax relief facilities are provided.
With taxes, the government has the funds to carry out policies related to price stability so that inflation can be controlled. This can be done, among others, by regulating the circulations of money in the community, tax collection, effective and efficient use of taxes. The tax that has been collected by the state will be used to finance all public interests, including also to finance development so that it can open employment opportunities, which in turn will increase people's income.
So, tax is not that bad after all. It is the money that the government collects to benefit us, the people. Studying law offers the opportunity to develop a range of skills and explore many aspects of human life. It gives you the chance to sharpen your mind, strengthen your understanding, and deepen your experience across the full range of humanities and social sciences. As communication science students, we will eventually work, whether in a branding agency, public relations agency, or even in editorial company. You can also establish your own company. It is our obligation to the state to report our assets. Why? We live, we work, and we take resources from the state. Paying tax is a way to give back to the state what it deserves. Therefore, pay your tax!